My name is Brad Ladislaw, president of the California Mortgage Association, and I'm excited for today's sit down with Enrique Flores with Servicing Pros. Connected with Enrique originally, I think a couple years ago we first met. Hit it off. He's heavily involved with CMA, and again, I'm excited for this conversation. So, Enrique, we might take in a few seconds. Introduce yourself and your company.
Sure. My name's Enrique Flores with Servicing Pros. I'm the president, CEO, founder, like all these titles. Started this company 2.5 years ago from zero, and we've grown quite a bit. We're a boutique loan servicing company, but aside from that, we also do fund administration, and we also do accounting for funds, accounting for lenders, operating accounts. So that's one of the things that when we first started, both Jennifer, who's the co-founder, and my wife, uh, she's an accounting major at USD. I'm an accounting major at San Diego State. We have those little squabbles every once in a while. But when we started, we wanted to help people with and phone
That's
and
how you know this stuff is live and not pre-rehearsed. It's okay. Phones will go off.
and so that's our main focus is doing accounting, doing fund administration, doing loan servicing, but doing it to a point of like really taking care of the lender and protecting your brand. And we get a lot of calls from seller carrybacks, or can I do a wrap, or I'm lending this money to my daughter, son, whatever. And I go, you know what? There's a couple of servicers here. I can refer you to them. And one of those servicers actually calls me every time I see him at a CMA or some. They're like, "You're my best salesperson." I go, "Well, I don't want. I don't, because I could stay an hour with one of those people where I could be talking to my portfolio lenders and my funds, and if they call me, I'm going to answer. So that's what we do. Uh, it's very white glove loan servicing for portfolio lenders.
Very good. And you guys are based in, remind me, Southern California, Northern
Yeah.
California? Where are you based out of?
San Diego, California. Yeah.
Very good. And most of your clients, are they California based? Are you guys nationwide? A little bit of
We
everything?
are
What's
nationwide. We recently just got some big clients out of Virginia and some out of Philadelphia, Florida. We've had one for a while. It's all Midwest, Tennessee, Missouri. When we've Our biggest clients are in California, though.
very good. I think that's what, so loan servicing. So you are effectively taking the back end support. Any lender, if they have the servicing rights, whether they're going to service it in house or they're going to, let's call it, outsource loan servicing. And I feel outsourcing loan servicing today is not the same as it was like in 1995 or 2000. Can you tell us a little bit more about kind of the, not only the efficiencies that you guys bring to the
Mhm.
table, but a little bit more about your platform or your software? Does it give lenders accessibility to see their entire portfolio, and you guys are just handling everything behind the scenes, or how does it work with you guys?
So there's a couple ways that we handle this. We could be the master servicer, we could be the sub servicer, and either way, we're still using the same software.
Yeah,
Uh,
I mean, cut you off. Can you explain the difference between the two, master loan servicer versus sub servicer? Is a sub servicer is like the lender could earn like a spread, and they're kind of the main point of contact, and you are truly like their servicing team. But
Correct.
just okay.
Correct. So as a sub servicer, what we're really doing is just being their back office. We do talk to their lenders. We do talk to their borrowers. We're doing the payment collection part of it.
Yeah.
If the borrower then becomes starts asking too many questions, or one of the lenders starts asking, well, why hasn't that borrower paid? Then we'll say, you know what, you need to talk to your master servicer. He could explain to it because he has direct communication with that borrower. That's the difference. When I'm a master, then I will deal strictly with the lender. I'll answer all the questions, and I have some brokers who they do the transaction, the deal is done. It's like, I don't want to have anything to do with that lender anymore. Just have at it, right? So, and then when it pays off, let me know though. So,
No, exactly. And I think that talking, I don't like calling it the old guard versus the new guard, but you have some private lenders that have been doing this for a long time, and they had the infrastructure and they set it up decades ago to service in-house, and I talk to them and say, hey, we're considering outsourcing loan servicing. They're like, well, you're potentially giving up the borrower. But it sounds like the way you're structured it, it's not necessarily the case anymore, because me, as the originating lender, broker, whatever you want to call myself, on a Thursday, I'm still I can still be the point of contact for the borrower. I can see when that
Correct.
payoff demand's being requested, right? Or is it kind of
No, you get to see it all, right? So if you, I mean, I have some lenders, brokers who want their emails on everything that I send out to their borrowers, and I go, well, that's a lot of that's a lot of emails,
yeah,
whether it's late notices and all that stuff. So there's some that are really, 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 talk. I have one lender who calls me every single day. But he has 100 loans with me, over $1 million. Like, you know what? Absolutely, I'll talk to you. And we talk about just random stuff, but then he'll throw in the question like, "What about this bar? What about this bar? What about this bar?" So, uh, as far as him calling me all the time, I don't really care because we only deal with portfolio lenders. So
yeah.
if I had 1,000 separate single loan lenders, and I go, no, don't call me. 'Cause
Yeah,
the-
and it sounds like a strategic approach you and Jennifer made on from the onset. It's, hey, we in the very beginning we are starting a new company, so we're going hot and heavy, getting new clients, but
Mhm.
then shifting the focus to more of your, I want to call it professional type lenders versus the
Absolutely.
seller carries. Do you see less risk in those loans as a loan servicer, or what was your guys'
Absolutely.
reasoning for that?
Absolutely. That is really what it is. I've actually have some lenders who I've known in the past who's like, "Oh, I want to start sending service to you." You know what? First of all, your loan documents are always different. The way you do your business, I really don't want it. They get mad at me like, "Why? Why are you? What do you mean you're telling me you
The
don't want?"
power of the push away. No one tells me no.
Right? Nobody tells me no. So it's just one of those things that it's really important for me to well example uh we have several lenders with over 100 loans with us, and what they do, they always have the same docs. So when we board a loan, we just did 20 loans. We did a transfer for somebody with 20 loans, and it took us like 2 hours because it had the same loan. And so now, okay, now we could, and I used to import everything. And believe me, I was a streamline importer. I go, no, now you're going to actually manually put these in, and we're going to check all these different items because I don't want 6 months from now, 3 months from now, 2 months from now to be like, oh, I, I gave you the wrong information. Let's reverse, let's repost, and that takes a lot of time too. So, back to your original question as far as software, what the software you use has their own portal. However, we created our own portal. I have portals for loan officers, brokers, lenders, fund managers, fund partners. I have like and bars as well. Mobile apps coming out really soon. I've been testing it, and I just haven't pulled a switch. Um, so as a broker, and a broker to me is somebody who has multiple entities or multiple lenders representing. You could see as a broker all your lenders' loans. You could go strictly into one of your lenders to see how they're doing. You could pull all the attachment, conversation logs. The whole thing is there. As a lender, then you only get your lender portal. Now, if you have, there, there's it's all tied to your email. So, if you as a lender have 7 entities yourself, you could just log in with one email and you can see all yours separately. As a broker, you see them all together. That's the only difference.
And I think that distinction is great, especially from because we do my company, we follow your traditional trust deed model. We don't fractionalize our loans. We do single investor per loan, but we don't, it's not just one investor. So it's important for us if we're going to log into any portal to see all of our loans real time. Sounds like you're, I get you're in the right field because I'm an accountant as well. I mean, I went to school for accounting and finance. I think that's why we get along so well. And I'm a firm believer if it's not documented, it's not done. And it sounds like you guys have that dialed in to where communication is logged, touches are logged, attachments attached, logged, and it's all in
Right.
one spot. Is that correct?
That is correct. That is correct. What we also do, for instance, I have several lenders who want to have ACH is required to be on, at the bar to be on ACH. So what I did for them, and which is available to everybody, is an ACH tab, which you go in and you see all your loans and you see which ones are active, which are not, which are being canceled, when's their next debit date, how much is their next debit date. So they're on that tab the whole time.
Oh, so you
Uh,
have a specific tab that will pull all the ones that are on ACH and you could see. Ooh, I kinda like that.
I
Well
have another one for brokers who have spreads, right? Uh, and those will have, is it a servicing spread? Is it an interest rate spread? Is it active? How much is that spread? How much are your lenders getting per lender? So, because some lenders have different spreads per lender in the
mhm.
same loan. So it has all that if the default rate is active. So that's another tab that you could just go in and say, if, for instance, if all of yours should be active, you just go inactive. You say, "Why is this one not active?" And he goes, "Oh, I remember I didn't get a spread on that one." So,
So,
but that's what that is.
and then when it comes to loan servicing, when you guys are talking to a potential new client, what is the major pain point they're currently experiencing before coming over to you guys? And
It,
again,
no, no,
I'm
it,
throwing this out there.
yeah,
I did not give you any questions ahead of
right.
time, and it's intentional just so I could catch you off guard. No, I'm just kidding.
There's actually
I know
there's
very loaded question, and I'm sure it's client dependent. But is there a continued pain point or trend you've seen out
there
there?
is
Maybe.
two major pain points. What third one, which is dependent on the type of lender there is. The first one is nobody answers my call. Which is like, I don't understand why, I guess if you have, 300 employees and nobody can answer the phone, it'll go to a voicemail and then you have to wait, or a ticketing system. So no, we answer the phone. And if it does end up going to voicemail, I will call them back. I have one of my brokers, uh, who was at a big servicer in LA. Uh, and he took him a year for him to come with me, and the person who referred him to me, like, he gave me kudos, right? He's best service ever. He goes, yeah, whatever. You're just, it's not true. Anyway, he came over, and then all his loans were perfect, and now he's got a borrower in default. And he goes, okay, and now I need to get I need to get a foreclosure trustee involved. So he texted me on a Sunday, and I answered him back. And he goes, "Why are you answering me? I thought you were gonna get this on Monday." And I go, "Well, you texted me. I have time. Why don't I answer? I mean,
Yeah.
it's a simple response. These are foreclosure trustees you could talk to." So that's one of the biggest things, that they don't get a response. They don't get answers. Second thing is, if you're a fund manager, or if you're just an any lender and you send a loan to board the loan, right? You just want the loan to be set up. Uh, It'll probably take us a day for that thing to be up and running, and it'll probably be longer when we're telling you, "You're missing this, you're missing this, you're missing this." And I have a brand new lender who just came over, who's like, he was upset at the previous servicer, um, and he sent me, like, little chunks, and I go, "No, send it all. Use our submission form so you can have all your forms there." And I go, "For this one, it's okay." And then a week later, like, he doesn't answer me anymore. Like, "You didn't send me your ACH form. I had a payment to send you. You didn't do this. You didn't double it." I mean, it's like, he finally answered back. He goes, "Oh, I've been really busy doing other deals." I go, "But this one deal is
Your
my,"
borrower needs to make payments here very soon. Like, let's get it set up.
and my boarding team's like, they're like, "Enrique is like, he's not answering. He's not answering me." Like, they're gonna think that it's my fault. Like, "Oh, it's not your fault. I know. I see the email you're sending." So I finally call him, and he goes, "Like, you need to." It works both ways, right? You do your job, I'll do my job, we'll get it done quickly.
I think you make a very important point there, and I compare it to us working with our borrowers. It's setting that expectation correctly on day one. You want us to close in sub 10 days. Here's our needs list to get things rocking and rolling. We have our checks and balances in place to make sure that our loans disclosed properly, the file set up. We're getting that submitted to underwriting with the complete file. I think it's the same approach with loan servicing as well. When you're going to onboard a loan or talking to a new client, it's like we can move in X amount of days, but here's our list. I know you have it all. If you're missing any of these, I would question the integrity of your loan without saying
E
that, right? You can't really say that, but having that, and I think your guys' accessibility to walk them through that process very early on, give them a little bit of flexibility on the first one. But it sounds like you're pretty proactive in saying, here are the things that we need to make your lives easier because we want this set up correctly on day one.
Right. So I'll give you a little insight, which is everybody can see it. Is I use a submission form more for them to be able to get me the documents that I need than what they're putting in. In the past, like I said, I would import it all. Now I don't want to import because most people are putting in like, oh, I forgot.
Well,
100 making
I
1 million.
might stick a finger. I could input it incorrectly, and it's
Right.
vesting's different on the deed of trust, which is different from the entity docs, and it's like, hey, they should all be fluid.
So we do all that check. We actually read your note. We read your deed. We read the HUD. We read everything, and even things that oh, uh, you're getting the prorate. Well, the HUD says that you got it already. So we read the whole thing. That was one escrow officer who they put a payment of $1,000 a month, which was the actual payment was over $10,000, and we called her like, you know what, you sent us the wrong prorate. You only sent us $1,000. He goes, that's not my problem. Like, well, it is your problem. You're an escrow officer. This should balance. He goes, no. Look, I have the loan closing statement from the person who's sent me the closing disclosure, and it says $1,000. I go, okay, that person's making $600-700 to just pump out docs, and you're gonna
Yeah,
rely on her. Can you please check it? And that's what we do. We check that, right? Because
it sounds like you're a checklist kind of guy. I'm very much a checklist kind of guy, and it's whether it's on the front end or reviewing docs and all that, but errors are made, and it's
right.
important to have those. I mean, they suck, and this is the Ernst and Young ingrained in me. And we had checklist for checklist when I was in auditing, but now it's so important to help catch some errors. And what are some of the big errors other than that prorated interest? What are some common errors that you guys catch as part of the onboarding, which probably
So
saves your lenders a lot of pain down the road in the
mm,
event a loan were to go sideways?
exactly. So when you're signing your syndicated loan to multiple lenders, and you
Right.
say, oh, if they were to put on the in the submission form, this is a lender, it is Jane Doe, and this is and then when you get it, we actually send an email to the lender saying this is what your lender said your vesting is. You wait, you're using my my SCP instead of my IRA here, like you did it wrong. Like, well, there you go.
Surprise!
Right, right. So, and if I wouldn't check that, then especially with the Naira, right? Like 6 months down the
Oh
road,
yeah.
so we send the email. It says, please confirm this is what it is. Um,
Especially if they fund it out of their IRA and they're not collecting interest into it. And then now, I mean, it can get tricky.
right. So all those things is what we check. We have. I mean, those are the basic checks that we have. Um, we also have I have about 50 queries that are on my computer screen. I won't show it to you, uh, but they all should be blank.
Yeah.
The minute somebody, and in fact, right before I got on this call, wait, why is that negative? That lender's negative $49,000, and I look, and I was right about to say something, and then I saw that it came back. I go, okay, they're reverse and reposting something,
Yeah.
and but it pops up on my screen saying, oh, why is this negative? Because our trust account has to be perfect, right? Not a penny off. So,
And I think that's where, yeah, if you go to, and it's fun, the conference next month, I'm going to be, the DRE commissioner is going to be there for
oh,
lunch. I'll be sitting down with her, fireside chat in a minute, but it's great. She's a great person, cares a lot about the industry. And one of the questions I'll ask her, what's the most alarming kind of finding you had throughout your career? And it's a lot of it has to do with trust accounting. And that is something that cannot be taken lightly. And you have a lot of originating brokers out there that the broker's license is one of the most powerful licenses I think you could have in California. I mean, it allows you to transact real estate, negotiate loans, broker loans, and also allows you to service loans. And not a lot of, I would say, real estate people are accounting people. They see the dollars that they could generate in servicing their own loans. They may implement there's some great softwares out there, but you need to have that accounting mindset and you need to have the procedures in place to properly reconcile. If you're off by a penny, that is, part of my French, that's a big fuck up. Like a
Oh,
penny is a
oh,
big, you can't have that.
right.
And you can't put a band-aid on it. So
No,
how did you get into loan servicing? Because you went to school for accounting.
right.
Tell me a little bit more about that, your career, and how did you get into the real estate side of things?
So, and when I right out of high school, I was going to San Diego State. I got a job with the CPA, and then one of my friends got into real estate, sent to an office. Oh my God, it's 1987. So I've had my license since '87, and I started working real estate then, and I've kept my real estate license the whole time. I don't really use it. Back then, I was a real estate agent, but when you're I better be quiet. Uh, uh, so I decided to
I'll cut this portion out. No, I'm just kidding.
yeah, so the people I was dealing with, like how I mean, we go through that now with back in my old company with seller carryback transactions with real estate agents telling them whatever it is so they could get the deal done, right? And that's not
Gary.
it is scary. So I went on to work as financial advisor. Then I got at all of that and started doing fruit export into Mexico. Bought my own semi trucks. I was, like my wife hated it because my Nextel was beeping the whole time, and then Mexico.
The next
Speaking
deals.
of,
Yeah.
speaking of tariffs, Mexico implemented a 46% tariff on apples and pears from United States going into Mexico, and our business just went down. So behind me there was a loan servicing company that was looking for a controller. I applied, got the job, and from there, I mean, I became the president of that company within a few months. So it is more because it's just knowing accounting, knowing math, knowing logic. And one of the things I always tell when we're to hire somebody, which we only hire, financial people, is your job is not to be a pencil pusher. Your job is not to just be data entry. Every time you open the loan, you have to look at it. And I don't care if it takes you more time, just look at it. And you're looking for things that are going wrong. And if you see something, let me know. And I'll create a query for it so it can't happen again. Uh, and it's because, the software that we have and that we've had in the past, you have to know what you're doing. It's not just putting numbers in. You can
Yeah,
put a
some of these
pin.
and I was chatting with a gentleman the other day with Cicady, and
Mhm.
they're not a fund control company, but they're a software that third party fund controls can utilize and it's basically a portal for the borrowers, lenders, fund control, GCs, that they could all go into one, do the requests. And he had a great point where you know, these software engineers, they're extremely intelligent people and they have an
Absolutely.
idea and they're like, oh, we're going to build this out. But how does it actually play out in real life with practitioners and loan servicers that are actually using the software? Is it functional? Is everything pulling through correctly? Or do I have to input here to then input here? And it's knowing the ins and outs of your software, I think, is extremely important. And you wear
Exactly.
a different hat.
Exactly. So for our portal, right? Our IT guy is extremely smart. He knows what he's doing. He knows coding awesome. And then I'll say, This is what I want." And like, boom, here you go. I go, "Well, that's not what I want. Is what I want is this." And he goes, "But this is the same thing." I go, "It's not the same thing. It's the lender wants this because of this, right? Whether it's the spread, right?" He's like, "Well, why? Why do you want that? Because it's really important for them to know how much money they're making." And
Yeah.
so, right. So it's he doesn't understand the why of why I want it done and in a certain way. So that's where we're at. Coders are really intelligent guys, but you have to understand the business as well. You have to understand what lenders want, what brokers want, what borrowers are looking for. And because they don't, for instance, in our position, we are a loan servicer where borrowers think that we are the actual lender. So they start asking, "So, oh, give me a break, don't do this." I go, "Well, we're not your lender. We're going to reach our lender to get permission for that." But our team is geared. So the bar is, and you mentioned this earlier, right? The lender's afraid of losing the bar. Well, what we do is we try to. If we do a bad job with your bar, then you're gonna lose them.
Yeah, there's
Uh,
reputational risk there on what loan servicer any lender picks.
exactly. So what we do is, I mean, I had one of our team, you know, you could hear her like, "No, this is go there. This is the pour. You click there, and oh, you got it. Okay, click there now." And so they're setting up ACH. And I remember being told like, you know what, just go quick, get him on the
Burn and
phone.
turn, baby. Burn and turn. Yeah.
Right. And I go, well, that doesn't work because we were just talking about this yesterday. We're hiring somebody, and like, how many calls do you get at different servicers? They go, oh, I used to get 100 calls. I go, well, gosh, we don't get that many calls here. And the reason is already set up. They're already talked to. They're already like nicely say, do it this way, do it. And if they don't understand, until they understand, don't get off until they understand, so that next month they don't call again, the month after they don't call again, because they're already set up, property. So we
Yeah.
do have a couple bars that always call all the time, but other than that, once they're set up, it's good. They could go to the portal and find everything that they want. So
And I think that, again, we touched on a little bit earlier. It's you spend a little bit more time on the setup and review, and in theory, it should save time down the road
correct.
on that. But some borrowers, I think, just like talking
I
on
agree.
that, and
I agree.
you probably get to a point, hey, I need you to call your lender or the originating broker because now you're talking strategy. I don't want to talk strategy with you. I'm your loan servicer.
Right. No, and that's really what. So especially when with the subservicer, I go, you know what? Don't just go. Just tell them I can't help you with that. Go to this is your servicer per se, right? They'll handle it for you. No, but I want to talk to them because what if they say no? I want you to tell them for me. Like, go, well, doesn't work that way. I mean,
Yeah, and
I will do that. However, most lenders want to, find out. I mean, it's bars saying, I want a 1 year extension. Like, why am I going to be telling you? Like, because you ask me a question like, why do they want it? What else do they do? What about this? Like, well, nah, I'm not. Call them directly and you get the feel, right? You're a lender. You underwrite things. You get, you're looking at what they're saying. Like, okay, it might be going sideways, and
Yeah, and I think those are great points that you made that a lot of originators out there and lenders probably don't realize the missed opportunity that they are having on building the rapport with that borrower. They get it closed, gets onboarded, and then they kind of set it and forget it. But the relationship that you've established with them, that's something that they can as well, which I think would increase the chances of them potentially getting that next deal. And then also again, going back to training, setting that expectation, some of these individuals may not be setting that expectation correctly with their borrower, saying, hey, we're using servicing pros. They're our back end loan servicing team, where they're an independent third party. This is intentional. This is how we walk our borrowers through it. If
Mhm.
anything were to happen to me as a check signer for the company, you always have a place to still remit your payment. It's going to get processed. Statements will go out. It will get dispersed to the lender. You'll get your tax statements at the end of the year. Uh, Irrelevant of my ability to kind of sign checks and get those disbursements. And I'm still your point of contact and
Right.
all that. And it's setting that very clearly on the front end. I think is important, but we're in a fast-paced industry, and I'm sure you get pressures all the time. Hey, this payoff demand needs to get done in 3 hours. It's like you've been in escrow for 60 days. Why is it just now
Right.
being requested?
Exactly. Right. Uh, yeah. Actually, okay. I'm going to tell you that. That's another part. Right. Well, there's
I knew
two
that
of
was going to be a little
yeah.
a little tease there.
Yeah. So we when I had hired somebody, and he was seeing how the payoff demands were done, and I told, look, do them, and he goes, well, this one's the standard, and you're doing the rushes the same as the standard, and I go, you know what? There's going to be a time where that standard person should be a rush, and yes, I'm going to lose money. However, I just want to get it done because if I why I don't want to be the person who's going to like okay, I'm going to slow it down for them and then I'm gonna forget tomorrow. Then it'll be 7 days later because I'm pushing them to the side. Like that inbox is gone. Clean it out every single day, and that's what we do. And for somebody like I want it like right now. They go, well, you just order a standard. He goes, I know, but every time I order standard, you give it to me right now. So like, I go, well, you have to wait, right? Because there's other people who are rushing here. But anyway, we try to get all pay off all demands out that same day or the next day. So, and
I think
I
it's a great.
when
Go
we
ahead.
were at the conference this past uh, week, one
At
of
the
the
Fortune conference in Newport.
yeah,
Yeah.
and somebody showed up and he goes, you know what? I just paid off. I use a different servicer, but I was paying off one of your loans, and that's my biggest issue with my servicer because it takes them 7 days to do a payoff demand. And I requested in the morning. I got it that afternoon. Like, how did you do that? I go, I go because that's our policies. Like,
Our,
just
our
get it in.
procedures are in place. It's everything is here. We have a request. We generate it, which is my next question for you on that payoff demand request. So a lot of times that will be coming from escrow,
Hmm.
especially if it's yeah, what should be coming from escrow. More times than not, my borrower is not going to be wiring in 550 grand to pay off the loan in full. So request goes to escrow. How does that work with your team? Do you have one individual that receives it and then generates the demand? Then does it go out to the lender for approval, or do they put reliant or the originating broker, or do they put reliance on your team to just generate, review, and send it out? How does that work for you with you guys?
So we have the escrow officer has to request it. It has to have a borrower authorization. It has to have a recorded deed of trust to make sure that they're asking about the right property that belongs to us as well. We then put in all the information into the system, and we will prepare and send it to the lender. Well, depending on our structure,
Servicing.
the
Yeah.
broker, if he wants to see it first, he will initial it, and then it'll go to the lenders on record, and then it'll go straight back to the escrow company so that they could pay it off. We warn the escrow officer at the very beginning, at the middle, at the end. Don't wire us money unless you call us. And we do it at the very beginning because that if anybody's going to take hack our emails, it'll be at the end, right? They're going to take it at payoff demand, but we do it at the very beginning. Do not. This is our number. This is you're requesting it from this company. So
It'll be
remember,
red, bold,
yes,
like
it is
bull. Like
absolutely yeah.
call me. Like old school is the new school when it comes to wires.
Right. So that's what we'll do. We have several brokers who have a contract with their lenders that they can sign for the payoff demand. So that broker will sign on behalf of those lenders, and then some escrow officers will want that agreement, and we'll give it to them. So
I think again, escrow and title companies, they're just doing their jobs. But I think it always kind of cracks me up. It could be the same escrow company, different office, same title company, different office, and they'll have completely different
oh yeah,
requirements on
like
that. And we have some paying off. And it's like, Susie, like we've worked like 14 deals together. Why are you running me through the ringer for my loan servicing agreement or my master loan servicing agreement? But here it is. And I think that going back to the opening, we were talking about how everything is communication is logged, documents are logged, everything is in one centralized location. Being able to have access to those documents that you should have and turn them around to escrow quickly. One gives them the confidence that no funny business is going on.
right.
They're actually paying off the rent. And again, looking at it, wire fraud is scary.
It
And the
is.
last thing escrow or title wants to be doing is dispersing to the incorrect account. So I know some lenders out there get frustrated, like, why do you need this? You've never requested it before. They got to, I think, sometimes take a step back and think, hey, they're just covering their asses as well, because maybe they got dinged with the wire fraud. And we've seen it. We've heard of it. We haven't experienced it personally, knock on wood, but it's out there.
Right. No, so I mean, it's all um, you always have to be careful with wire fraud. Luckily, it hasn't happened to us. One of the lenders that's come up from Virginia, he said it happened to one of his buddies who's also a lender, and it took him 2 years to get it from the bank, the money back, and
He's
it was
lucky.
yeah, he's lucky, right? It happened to us at a different company, and it didn't happen to us as a servicer. It happened to the the broker and the lender were doing a holdback, and the holdback was supposed to go to the borrower, and it never got there. So I heard about it, and that was like 150,000. They ended up getting 60,000 back, but they lost 90,000. So
Is it
I
not that's tough. So fund controls. Do you guys, if you had a lender that is doing like a cosmetic fix and flip deal, small fund control, not like a ground up, do you offer that fund control service to hold it in your trust account, and then they'll handle the inspections, the reports, rec it, and then with the borrower authorization and rehab draw request, say, hey Enrique, like you're authorized to release 35 grand. Can you release that? Is that something you guys
Correct. So
offer?
what we call that a lender discretionary holdback. The borrower has no say in this whatsoever. They can't call me for anything. I don't even care if it's kitchen. Don't tell me what it's for. You have discretion, and we have a contract for that. That it's a lender discretionary account that we will hold for them, and then we will wire out or check whatever they want. But we will do that here. It's a and the key part is lender discretionary because we're not an escrow company.
Yep.
So and then the other key part is we're not a fund control inspection company.
Yep.
So and I don't want to know. I don't want to get those receipts like, well, I told you it was for the kitchen. The kitchen's not done yet. I go, well, I have no idea because I'm not.
The words you use are very important in this business. I see the word advisor, partner, all these things flowing around out there. It's like you're not an advisor, you're not a partner. I don't think you're going to be sharing losses with your clients. So be careful with
Right.
that word.
Right.
But to your point there, the lender discretionary account, and it's a specific form that you recommend that get signed with loan documents. There's
Yes.
going to be a fund control. So ideally, it's explained to the borrower here's how the fund control works and all that, and then you guys have to hold that. Let's dive into trust accounts real quick. Uh, so in simplest fashion, what is a trust account? Because these fund controls or lender discretionary funds need to be held in a trust account, right? And what's the importance of a trust account, and how does it function?
So the trust account is well, in the basic word is trust, right? So what we do is we hold it in a trust account that we are not going to use it for anything other than uh, collecting funds and dispersing funds. And then the other important part is that what we do is for the trust accounts have sub ledgers for each one of those borrowers and each one of those lenders. And then the borrower loan is going to have several buckets themselves. One is restricted funds, which is holdbacks. One's impound account, which is what we use just to pay, their property tax and insurance. We have the regular suspense, where it's like they send us $50,000 and they don't say what it's for. So it just stays there until they tell us what it's for. And we don't assume anything. We want to get confirmation from the borrower to do that. And then we do have a good funds policy. So if we get a payment, we'll hold it for 8 days, making sure that does not get rejected by the bank, and then we will disperse it to the lender via ACH. So and then one other key important part there is that trust account is audited by the Department of Real Estate, and and we also audit it every quarter with the CPA to make sure it's done. And every day, every single day, we make sure that it is perfectly balanced balanced, and then we reconcile it every month. So and we have all. I mean, believe me, that's the biggest thing. When I was trying to go up looking at servicing software, most of them don't have, you know, do it in QuickBooks. And I go, well, that doesn't quite work. There's another thing there that we do, and this is really important for the bank, for FDIC insurance, is that, it's even though our trust account has a lot of money, we have to have it in subledgers so that each subledger is covered under FDIC up to $250,000. And if we were to just put it all in one spot, that would, and then the DRE would like say, "What do you mean it's all in one spot? That how do you know that belongs to that person? How do you know that belongs to that person?" So that is we're very meticulous as to making sure the trust. And I have about 10 queries that are looking at the trust account because we have so many transactions that are in process in transit per se that if you don't have specific queries to make sure that all the underlying things match. I have some lenders who have, hundreds of thousands, millions of dollars that are in our trust account. But if I were to release too much money, you won't be able to tell because they have so much money.
Yeah. And I think you have, I didn't know I was going to ask you that question till we are, 40 minutes in, but that explanation was great. And I think it really highlights the complexities of servicing your own loans, especially, I mean, if you're servicing one loan, you can figure it out 10, okay. But once you start doing volume and you have a fund control here, you have a borrower that sends an overpayment or an underpayment or doesn't label it correctly. If you don't have the software, the eyes, and the manpower behind you to do that, it creates a snowball effect, and your small errors compound very quickly and then can become a very big issue. The quarterly reporting and reviews and audits, the annual that you're sending, the reporting to the DRE, and there's a lot of things that come into it. Whereas in years past, it was kind of like the wild wild west. A lot of people, I don't think, necessarily did that.
Right.
They
Right.
should, but investors don't even realize that they what questions to ask. And I think your breakdown right there is just an outline of three basic questions any investor should ask of their loan servicer, whether it's the originating broker that is going to service it in house or a third party, because that's a lot of action right there, and there are reporting requirements,
Right.
and it can be verified on that. So thanks for uh, breaking that down. And it's like, in short, the trust funds they're not your funds; they're for a
Yeah.
different party that you're holding, and you can't have your operating account commingled with it. Anything, it is completely separate ledgers. And awesome point on, I didn't even think about that, the different subledgers per a trust account, if you want to call it, within the trust account
Mhm.
for the FDIC insurance thresholds. Because if you had it all just call it $100 million in a one account, you got 250 grand,
Mhm.
right? But that could be across 1,000 different loans, sub
Correct.
250 grand, to where
Correct.
now each one is um, protected. And I completely spaced on that. That's a good question. Another good question to ask there.
Yes.
Um, you guys said fund administration. Did you guys open up when you first started servicing pros? Did you know you wanted to have that fund administration component to the business, or did that come later on as a necessity or need from some of your clients?
When I left where I was at, I didn't want to start my company and become stealing clients, whatever. So what I did was we got hired, or Jennifer got hired as a interim CFO for one of the lenders. He goes, I don't want your servicing, but we'll help you with your accounting and your. I mean, she hires people for him. She's HR work for him, right? And she goes, oh, we'll do the accounting for this, and then what about? Can you do the accounting for my fund? And then she like look at it like, yeah, this is accounting. This is,
Yeah,
this
I
is
live for this.
this is it. And then it became like, okay. And then she doesn't let me touch that part of it. You're the servicer, I'm the fund administrator and the fund
It's
accountant.
important. It's important to keep it
Yeah,
separate.
'cause I do things my way. And she goes, nope, this is what we're gonna do it. And she's been growing that business quite a bit. Uh, Lately, we have two new clients that were trying to do it themselves using the same software that we use, and they're like, I mean, he goes, "I don't know what I'm doing," and she took it and she goes, "Okay, here, let's go through this together." And even though the it's the mortgage office, they said, "Can you help them out?" So because our back team just can't seem to help, and sure enough, she helped them. She says, "You know what? I don't want this anymore. Can you do it for us?" It's like, okay, well, I'll teach you, and so that's what we're doing, right? We always try to help our other providers. However, in this case, um, she does such a great job that she says, forget it. I'll just you do it from now on, and
Yeah,
and don't and don't let Enrique touch it.
and I think those are all great points. It's you have lenders out there that now they're originators, sales guys, a lot of great sales out there, and now they launch a fund. They're able to raise the capital. They're good at it. They're good at originating. They're good at underwriting, but accounting is just not their forte. They could figure it out because they're sharp individuals, but it takes them away from what they do best, and
Exactly.
it pulls them out of the revenue driving items that they need to do and run their business. So letting go is a very big challenge for a lot of, I think, type A personality business owners out there. It's like, I'll just do it myself or hire someone to do it. But there's liability issues that come into play, and then just resources. So why not have someone that specializes in it take it off their plate
Right.
and put you in a review position, versus
That's everything that we do is that way, right? It's we are well you your job is to originate loans, right? You should be focused on that. And then what we're focused on is this. We don't originate loans. So I don't want to go there. I don't want to be a fund manager. We want to help you succeed. And then uh, you focus on yours. I mean, you're going to grow. We had one fund manager who went from last April from zero now to $25 million. And one of the biggest things with him was that he was trying to do it all himself before, just doing loan originations. And he when he met Jennifer, she was like, "Okay, here, look at my QuickBooks," and she's like, "Whoa!"
ugh,
And she went. She goes like, "I'm gonna go back. You file your taxes with the CPA, 2 years ago. So well, let's go back 2 years, and from here we're just gonna do a, you know what?" He goes, "I really wanna know what that is." And so she went back 7 years, until 7 years down, she, like, matched it all the way perfectly. The CPA had some issues there, but
yeah,
because how are you doing this when you have, a couple $1,000,000 and you're, a loan here, but you don't have that loan for 5 years. So, uh,
yeah.
but anyway, so, and I remember she's like, "Oh, man, I'm gonna send you a big bill." He goes, "Go for it. Best money I've ever spent." He goes, "You want a barrel of wine to go with it?"
I'll take two.
Right. So that's what some of the things that she does on the fund and accounting and fund administration side. That's really really important.
Now, so you clearly have an accounting backbone with an entrepreneurial mindset.
Mhm.
Uh, what what has been the biggest challenge for you and Jennifer, let's say, in the first 12 months of launching Servicing Pros? What was the biggest challenge that you guys faced? 'Cause it's not an easy feat. Just say, hey, we're going for it. Was it the infrastructure? Was it the people behind you? Was it getting new clients without stepping on toes? What was the biggest challenge you faced?
The biggest challenge is probably getting new clients at the very beginning, where you're just, you just started. Like, how do I know what you could do? I ran other companies, loan servicing companies, and they knew me well, but now you're new, so that means that how do I know? Uh, and luckily, I had a really good banker relationship that allowed me to get all the things that I needed, whether it's the ACH, NACHA file set up, wire set up, you know, all the banking stuff is really important, and that was all set up at the very beginning. Um, then once uh, at the very beginning, they're like, okay, since nobody knows who we are, we'll just do our web based. Uh, we'll just do everything for seller carrybacks because they're not going to ask those questions. And luckily, right before this one client that she's doing all these HR accounting work and is doing all the fund accounting, not the fund administration, but the fund accounting for. Uh, he's like, "Oh, you know what? Like somebody called me that remembers us. Asked me about you." And he goes, "I'm going to send them to you." Like, absolutely. And then all of a sudden, like it just started happening. I consider myself not to be a very good salesperson. Sometimes Jennifer says like "Why you tell those people you can't do that?" I go, "Because I can't." So, you know, like, I remember, like, "Sure, I could do that," and then, they come in and like, "Well, I really can't," but, uh, I go, "Well, what good does that do? All they can do is get some really pissed off, clients that say, 'You promised me this,' and I definitely don't wanna promise things I can't do." So, and I'm not a real salesperson, so what I some of the biggest clients that we've gotten are like, "Just give me 3 or 4 loans, that's it, and then just test me out, and you can see what I could do or I can't do." So, and those are the ones that have grown the most. The ones that, I send emails out to them every, like, 6 months later. I go, "Okay, I promised you this. Did it happen?" He goes, "Absolutely. We're good. We're happy." Okay. So, and that's really what it is. It's not being a salesperson per se. Uh, I know what I could do. I know what I could do for everybody. It's just getting them in the doors. Probably not.
And I think investors that are writing big checks for loans and brokers and all that, they're they're just tired of getting sold. Like,
Right.
what what are you good at? Does it fit my need? And I appreciate you telling me, no, we're not going to do that for you, but this is what we're going to do and do extremely well. And I think that carries its weight in gold.
I think we were blessed to be able to get those first big clients. Our first big client is like $100 million, and that was our first client. So, yeah, they knew who we were, right? So, and they're still our client. That's a good point, right? They're still our client, and I think it's just being able to do everything for all our clients and pick and choose who we're going to take, and not over promise, um, and like just the fact of like not taking seller carrybacks. When I like one time I gave like 10 in a week, and I go, wow, that's a lot of business I'm giving away. But even talking to that initial, like, do you do seller carrybacks? And I go, no, sorry, I'm going to refer somebody else. But before you go, can you explain this to me? Like, no, let them explain it to you. I need to
Yeah, you
go.
probably shouldn't do it on this one. I'll tell you that much. I'm just kidding.
Yeah. And it's just one of those things because since they don't know what they're doing, it just takes a lot of resources to handle that one client. And
And
and we have a strong team here, and one of the things that like when we board a loan, right? They already know, like they're like almost templates that they're bringing in, and every time we get a brand new lender, like, okay, we have to learn their business,
yeah.
and we just got one that like has all kinds of different. Like, no, go this way, do it all this way. Makes it easier a bit. But that's what we do. That's the toughest part is getting the business in. Uh, it would have been the tough part getting the banking in, but that was taken care of. The software thing, I you know what I'm actually for TMO they beta tester for them, so they will tell me, hey, can you check this out? We're doing this new mod. Can you look at it? Absolutely, and he says, why are you helping with this? I go, because that means that whenever I have a problem, you're gonna answer me right away.
Yeah, you will answer my call.
You will answer my call. I'm helping you. Remember that. And so anyway, so that's really what technology is really important for me. Having the right software and having and understanding the software, and I just got it one, which is interesting, right? They're doing a 50 basis point spread, and but for whatever reason, he's doing a long term amortization, doing two. And he goes, it's not matching with my amortization at 10% and at 10.5%. And I go, well, because the software is taking spread up front and then amortize it after that. And it's just doesn't quite work the way you think it's going to work. Okay, I get it. Now. I understand now. And I go, well, it doesn't look right, but it is right.
Yeah,
So,
exactly. And then second position loans. I mean, are you guys? We won't go too much down this rabbit hole, but with the recent passing of AB 130, different a lot more burden put on loan servicers, especially servicing second position loans. Are you? you guys still servicing second position
We are
loans?
still
And,
servicing
and
second.
are you accepting transferred over second position loans that were are serviced by another one? Can you explain why?
Okay. So we are still servicing seconds. We have to treat them now as consumer purpose loans instead of, even if it's a business purpose. What I have queries now that is going to say all these seconds need to have a payment statement. And now what we're implementing is now sending them account statements. So you get two statements, which we used to do in the past, but they were always called like, "Why are you sending me the statement twice?" So, but for seconds, I wanted to get it twice because I never want to say you missed one. So, you know, with AB 130, it's they're looking for that servicer to be perfect. Um, and for the type of business that we do, if they originate with us, we know the whole flow of it. We know they're going to get all their statement. When they're going to get all their notices, they're going to get their tax return. I mean, their tax forms. All that stuff is going to get done. When you mention transferring over as a servicer, now you have to test.
Certify?
Under
Or
penalty, certify under penalty of perjury that you did everything perfect and that your previous service did everything perfect. I go, well, I'm not gonna vouch for that guy.
yeah.
So, I rather, and in fact, I just had one that tried to transfer over to us to do a foreclosure, and I go, "You don't want that. Keep it over there. Just, make sure that they certify it." And,
But they
it's
probably weren't
penalty.
certifying it, so they're like, "I'm gonna try and transfer it to someone that
Probably.
will."
Yeah.
Uh,
So that's we will not take transfers for that reason. And even if we're, what I tell people about uh, this scenario is that if you're going to keep on doing seconds, just know that everything is going to be fine until it's not, and it's going to be that one bar who's going to say, the default. I've always butchered hunting claw, right? The default interest one. There's always that one person who will look for that way out. But if you have a good borrower, he's going to pay it off. I mean, there's
yeah,
not an issue.
yeah, and the way it's written, it says the borrower just needs to believe
Right.
that something was done
It's the
incorrectly
most
to
absurd
petition the
thing.
court. And what no one really is talking about, and what happens in the event that so if you're foreclosing in second position, chances are that first is foreclosing, and hopefully you file that NOD first. But if your loan servicer is not willing to certify it, or even if they are, and you certify it, and they all believe something was done incorrectly, and then they petition the court, there's nothing to stop the first. So this new law is still relatively in its infancy, and there hasn't really been much pain yet. Yes, if you're originating a loan today, yeah. And unborn into loans are not too concerned about it, but everything that has been on the books, and that's a lot, whether it's institutional seconds, HELOCs, debt issued from credit unions, seller carrybacks in second position. There's going to be a lot of seller carries in a rude awakening
Oh my God. Well, carrybacks.
because
No,
there's no welcome packages. There's no
no.
statements. There's no tax statements in at the end of the year. Every little checklist, and it's not a dormant loan. It was just negotiated on the front end. So I think yeah, we're talking from a lender's perspective here, but there's a lot of sellers out there that they're just consumers, and they were told this is a great way to just kind of help sell your property. You'll get a little bit of a return, and I think once lenders start taking losses because they cannot foreclose, and then that first wipes them out across the board. I don't think institutional lenders will be insulated from this, and I think once that starts happening. Um, you're going to have lenders say, hey, I just don't think I want to do seconds anymore. Or my pricing is going to change drastically to where it doesn't make sense to have a second, to where you zap some of that liquidity out of the marketplace and it can greatly, in a negative way, impact the consumer that is just trying to tap the equity in their home. So it's a very
Yeah, you know what?
slippery slope with that.
For borrowers who need that, and there's a lot of borrowers who need that, right? You want to do something to your home, the HELOCs. It's a necessary tool that the industry needs, and for them to shoot it down like that, I understand Well, if I look at it from 10,000 foot view, they're trying to get rid of zombie loans, but they went too far. Like the very beginning, like, oh, you know what, just do a 2-year loan and don't make it go past three. Well, no, they're saying even if the very first month you missed a payment, they could contest it. So
Yeah, it's again, it's I see where they're coming from, but as written, I think could be tightened up a little bit, a lot.
a lot,
It's
a
very
lot.
wide reaching, and in an attempt to help the consumer, a small sample size in 2025 compared to 10 years ago when people were actually buying distressed notes. It's gonna actually hurt the consumer in the long run, and it's yet to play out. Like it's still in its infancy, but I've had quite a few conversations with attorneys and trustees and loan servicers that won't certify a loan. They won't accept new loans to be transferred over and in. So if you have a company out there originating seconds with one loan servicer and then they sell the loan, it could take additional liquidity out of the marketplace to prevent them from writing future seconds if they don't have a loan servicer that can service that transferred loan. So it's very much um, I'm trying to pick my words
No,
wisely here. It's hopefully there's a resolution in the future. I know CMA and quite a few of the other trade associations are taking the steps to again educate the legislators up there in Sacramento and pursue it. Any avenues we have to try and get this either the scope of the language narrowed down or just changed or scrapped because it's I think 5 years from now we will look at this law if not changed and the debt markets I think will look different in the state of California.
yeah, I agree. It has to get. They just have to see what's actually happening, and I think the CMA is doing a great job of lobbying this is to say this is not the right thing to do, and this clean it up. You
Mm,
don't. I
mm,
mean,
mm.
I could see protecting the zombie mortgage thing, but make it specific for that. If this, um, and those people who are buying zombie mortgages, I mean, if somebody actually forgot about it and actually like the one they put there, like 1099-C, like, well, they already got rid of it. Like, why even buying that now?
Yeah,
um,
you can't. That's done.
it's done, right? But anyway, so I get it, but it does affect our business. We actually have a couple foreclosures of seconds that just started, so we'll see. We'll know in
Yep.
about 60 days.
Just go through, and then it's just another stall tactic that attorneys will be licking their chops for. And again, I have a lot of friends that are attorneys, and the only ones that will make it out in this situation,
Yeah.
rosier, are the attorneys. But it's no, no, we'll see. Not to, I don't want to end this sit down on a Debbie Downer conversation topic. So pivot, complete 180. Who is Enrique Flores? What do you do for fun when you're not servicing your clients, servicing loans? What do you like to do?
Wow. You know what? It's interesting that we talk about this with Jennifer and I. 'Cause we work together. We're married. We're always together. It's like, what do we do? Like, you know what? It's taking those trips. Actually, staying with family. We have a once a month family gathering with all our kids and grandkids and stuff. But the other thing is just going out to. We take a couple trips to Cabo and go golf, and I'm definitely not a
I've
great
seen some of those posts. That looks great.
and visiting with friends. And so it's not really any. And Tahoe, we're going to Tahoe for Thanksgiving. Every year we go to Tahoe for Thanksgiving. I gave up the snowboarding because I love my knees and my
Smart.
arms. Yes, and let the kids go out and snowboard, but yeah, not me. I'll just sit at the lodge waiting for them to come down. But that's really what it is. Mostly just, and we used to, when COVID started, we used to go golf like every. We had nothing else to do, so like at least once a week and or maybe twice a month. And now we're like, we haven't done that in a while, so we have to start doing this again. So yeah, I definitely don't surf. that water, like, I get near the water, like, I love the view, but it's too
Put
cold.
put your toes in. Put the toes in.
Yeah, yeah, so it was
And you
anniversary, we went to Coronado this weekend, so and we actually both put our toes into the Coronado water, it's like, "Okay, we did it, now let's go back."
okay, we're good. Where's the wine?
The good one.
Uh, 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 and you mentioned grandkids. How many grandkids you have?
We have 7 and number 8's on the way in February, so
Ooh, congratulations. And what age groups do they span?
we have a 19-year-old, who's going to college. He's supposed to transfer to San Diego State next semester, and then the, baby Rory is a little bit over a year, and then, the next one's coming out, so most of
Uh,
them are teenagers, which, like, okay, I'm that granddad's gonna bring him in, love him, but take him back.
yeah, get them all riled up
Well,
and get
the
them out.
teenagers are, yeah, oh, yeah, but
Uh,
yeah, that's what we do.
That's so
Very
great. And
family oriented, and, luckily, we have a really good family, so, um, yeah, you know what? The whole whether it's family, whether it's business, we've been very blessed. We've always helped others, build their businesses, and this is the first time that we both said, "Let's do this on our own," and we did it, and I mean, I have I know what I could do, and I've always had that in knowledge of what I could do, and I trust myself. So it's like I go because I did it for everybody else. So I mean,
mhm,
having 20 trucks in the road, and next doing all this stuff is just I know what we could do. So luckily we've been blessed, and it's worked, and we've been growing quite a bit. So it's been fun.
I love it. One last question for you. Bucket list trip. I know you're a family guy. Bucket list trip. Expenses are not an issue. What are you and the family doing? So I know you're probably not going by yourself with Jennifer.
No. Yeah. Actually, we're it's a bucket list thing, but it's not. We're one of my cousins. He's having his 45th year anniversary. I forgot what it is, and they're gonna do a cruise in the oh my god, it's going down the tip of South America, starting in I forgot. They told me all the cities and stuff, and I go, it's gonna be like a 2-week cruise, and I'm really, really, really wanting that because we did a cruise for Christmas one time that took 2 weeks, uh, and I think that's gonna be cool just to see different parts. We went the first one, Costa Rica, Guatemala, Colombia. We went to the Panama Canal, and this one's gonna be forget the Panama Canal, just go all the
Going
way
all the way around.
down.
Oh,
And so that'll be fun. I like it because I don't have to I could do multiple places at one time, and I've always wanted to go to South America anyway. Um, so back in the when I was in food export business, my partner would do all those trips.
yeah.
I was in the background doing all the operations, like you buy, you sell, and I'll take care of everything, right? So, but he was the one taking all the trips. I go, wow, you went to Brazil, you went to I was like, you never took me.
That's so funny.
So yeah,
Very good, Enrique. Well, thank you for your time. I'm glad we got to finally get together, get you in the hot seat. Looking forward to catching up in person up in Monterey here in a
yeah.
few weeks. And if anyone wants to find out about you or Servicing Pros, what's the best way to get in contact with you?
Servicingpros.com or get her 877-313-0095. Give us a call. Go to our
Perfect.
website. It has all the information there that'll get you going. And I do demos as well. So if you want demo of the portals, absolutely give me a call and I will set that up.
Love it. Love it. Very good, sir.
Thank you.
I'll talk to you soon.
Bye bye.